Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we're going to be doing a higher time frame to lower time frame analysis. There's been many of you that have messaged me asking, well, how do you start analyzing a chart? What do you look for? What are you expecting? How can you sort of work your way down the time frames? And really with this video I'm hoping I can answer that question. I'm just going to be showing you what I do. Remember, trading is individual. Analyzing a chart is subjective. So I'm just going to be giving you what works for me, what I've been doing for a very long time, and how I sort of break the charts down. However, before we get into the video, I want to make a quick announcement. That announcement is that the mentorship is most probably going to be available starting Monday. I will upload a YouTube video explaining everything in regards to the mentorship on Monday, so that should be very clear in that sense. Now, with that out of the way, let's actually get started with today's video where we break, in this case, GBP AUD down as a pair, which is something that I usually trade. Reason being is because it moves a lot and it actually fits my personality and trading style. So we're going to be doing that, right? We're going to be breaking the chart from the higher time frame to the lower time frame down. So guys, here we are in the drawing board and let's actually get started, right? If you see in my previous video, which should pop up right now on the right hand corner, I really talk about top-down analysis, but we're going to be refreshing some stuff, right? As I said, you want to start on the higher time frames and work your way down. However, you don't need to determine structure and points of interest on each and every single time frame. You just need to keep information that is relevant for you in mind and move your way down that way, right? You don't want to be determining every order block on the weekly, every order block on the monthly. No. You just want to be seeing what those timeframes may be telling you, really trying to gather the information that is relevant for you, and then moving lower and lower until you're satisfied with the information that you have, right? So we are actually going to get started right now. So we're looking at GA in this case, right? This is the monthly time frame. This is sort of a time frame I would actually like to start analyzing a pair on. So we look over here. What do we see? Well, we can clearly see that this market is absolutely ranging during this particular period of time. However, it's slowly retracing up, right? And if we follow the structure points that the monthly is presenting us, we see sort of a high over here, potential break in market structure over here, making a low, making a potential higher low, lower high, sorry, as we can see if we follow the structure points. So a possible expectation could be something like this, right? We're now starting to drop again. We're potentially retracing, but we should really continue lower and make a new lower low. That is sort of a information that I can read within the monthly. That, however, that doesn't mean that I'm going to be trading that bias over there, right? It's just information that I'm keeping for myself and that I'm sort of trying to remember while I work my time frames down. So we remove that. Let's jump into the weekly, which should give us more information, right? And we can see more clearly here that we do have that high. We do have that potential break over here, right? Very minor break, but still a break. And now we're potentially retracing into that lower high that would lead into a lower low, right? That's sort of what I'm thinking at this point. So let's actually continue, right? If we draw a fib from the top to the bottom, we can see that we're starting to enter into sell discount pricing, right? If we are following that bias, we could expect somehow a lower high to form anywhere inside that area. However, that's not something that I want to use if I'm trying to trade today, right? So that's just an information over there. Let's actually keep moving. And the daily, we can see that we have more information over here, right? We do have a established bearish trend at this point, and this is absolutely valid. We made a new low over here, so we could be expecting this to occur right here. So we continue, and we're actually going to be denoting that, hey, our daily time frame tells us that we do have a break in market structure over here, right? And you can actually use something like this to denote that break of structure down. And if you ask yourself, where did that break of structure come from? You should be able to tell me that it started over here. So there's potential points of interest across this area that I may want to watch for continuous sales, right? So that is something that I'm really watching at this point and that my brain is telling me to focus on, right? So I would actually go ahead and drag the fib, and you would expect for the wait for those discount prices, right? I can see a point of interest over here, right? Let me actually use a different color. Over here, I can see another one sort of over here, and a bias, just looking at the daily, guys, this is why you work the time frames down. A bias, potential bias could be something like this, right? You could say to yourself, okay, we just made a low, we may mitigate some previous block order over here, which should lead into a retracement that then should continue the trend lower because we're in an absolutely bearish trend within the daily, right? So you could now say to yourself, okay, I'm going to be waiting for this point of interest over here, where then I'm going to look to confirm my sells lower. This is something that you could be telling yourself at this point, right? So we continue working the time frames now, right? I'm not necessarily going to keep any of this analysis because I still want to see what lower time frames are telling me, right? This is just something that's in the back of my mind as I work the time frames lower. Let's go into an 8 hour, and 8 hour is getting a little bit messier, right? But again, the same principle applies. We see the same break over here, and we sort of see an internal leg occurring at this point. So we may want to be paying attention to those points of interest within these particular areas over here, right? However, we need to still work our way lower. Let's go to the 4 hour. What do we see? And if we look left, I would actually be paying attention to some POIs, bullish POIs over here. Reason being is because this actually initiated a move that established a new high. So if you're looking at the external trend, we can clearly see that we have a low, we have a high over here, right? So possible expectation, if we connect the dots, could be something like this. Whoops, let me actually grab the tool. We could potentially be expecting something like this, because this is very long-term oriented and not really helpful for today. But you want to keep that in mind, right? You should know that you are you had an impulse over here and now you're retracing. However, as we retrace, we're making bearish structure over here. And I'm not going to get into details because that's reserved for the mentorship, but you should always assess what the candlestick structure, meaning internal structure, is telling you, and really focusing on that, because that's always going to be the most recent trend that you want to pay attention to, right? So we understand that our external structure may be shifting bullish. However, we do not have it confirmed just yet. Let's go to a 2 hour, and this is where things actually get interesting. This is where I would actually look and start framing POIs. But once again, this is actually how I do it. You can very well do the same thing on a 15-minute, on a 5-minute, on a 1-minute, on a 8 hour, on a daily. The market is fractal and every pattern repeats itself on every time frame. So you just need to find what works for you. Once again, we do see that we do have some sort of double top liquidity over here. So this particular POI may not be the best, but just as an expectation, you do have a low over here that got taken out, right? You can say to yourself, this is my break in market structure lower, and we're potentially retracing into discount pricing over here. And we could potentially expect some bearish pressure over here. So let's actually get started with sort of analyzing the chart in regards to the annotations and rectangles and tools we want to use, right? So just looking at this time frame, I can very well expect some sales occurring from any of these areas into lower prices. However, let's actually zoom out once again and let me denote that bullish point of interest that I was talking about. Reason being is because we do have a potential shift in regards to the external structure, right? So we can see that we're hitting some sort of point of interest over here, right? And I'm not going to get into detail, but this is a valid point of interest. We do have another one over here. So you could very well be expecting some sort of retracements. However, I would actually be looking to sell this market more than buying it, unless we do really start hitting those areas over here where we could potentially expect some longer term sells, right? But let's actually continue. We go back to the 2 hour time frame and we see that we're hitting that point of interest over here. We also see, right, you want to be assessing liquidity and structure. If we were to follow these structure points, this could look something like this, right? You could say to yourself, this is a lower high, lower low, lower high, lower low over here, lower high, lower low, lower high, lower low, lower high, lower low, and now we're retracing into a lower high. So an absolutely valid bias for me. Let me actually get rid of all these brush tools because I don't want my chart to be messy. Let me get rid of this. A potential bias for me at this point is sells, right? I want to see sells because my internal structure is bearish. Even though we're hitting that high time frame point of interest, we do still have some room, as we have, if we look closely over here, we do have imbalances over here that may want to get filled before we actually move higher. If we actually end up moving higher, we never know with 100% guarantee. So let's actually start tracking sort of liquidity, right? Let me zoom into a 45-minute time frame. And what do I see at this point? Well, I see that we had some sort of trendline liquidity over here that got taken out. We also see that we had some sort of trendline liquidity on the way up that is just now being taken out. And I see a particular structure point over here that I like, that I may want to monitor for sales. And this is an absolutely valid bias to have, right? You can say to yourself, okay, we made a new low over here. Even though we are hitting the high time frame POI, I can still expect a mitigation play occurring here, right? And this is something that I would use. I would use a POI over here. I would put this emoji on top just so I know that I need to be watching price as we hit over there. And I would actually go ahead and look for the POI over here. Essentially, both areas over here are going to be of interest for me for continued sells. In regards to buys, which could also be available, what I would need to see is a break over here, right? Let me actually get rid of the red line sitting on top. Let me get rid of this POI because for now we're focusing on this one. I would need to wait for this lower high to get taken out, right? Once we get that, all these POIs on the way up become valid for buys, right? I would then say to myself, okay, we've now broken structure and we're shifting internally back bullish, which should match up with the external and higher time frame structure over here, right? So I would then use something like this. Let me get rid of this. And what I would actually do is wait for the break of structure to the upside. Once we get that, right, let me actually move this to the left. We can expect that, hey, POIs within the 60% or more retracement are going to be absolutely valid for buys. We could potentially denote that one. You could potentially denote the breaker over here, right? We do have a breaker with imbalances on the way up, so this is a high probability breaker. And we do have some liquidity sitting on top, so we could very well do something like this, right? If I was to be looking for buys, I would need a break of structure over here, right? This structure point get taken out, a retracement over here, and buys, a retracement and buys. And this is a bias that I'm going to establish for myself and I'm going to be waiting for. So I could very well do something like this and tell myself that if we break that high, this POI becomes valid for buys for me, something like this, right? And you could say to yourself, well, where I'm trying to get, and you could actually target a previous structure point that may be potentially sitting on top, right? You could say to yourself, okay, this POI over here looks pretty strong. Reason being is because this is actually a internal lower high, right? If we follow structure over here, and let me actually grab my tool, we can see lower high, sorry, let me start again. Lower high, lower low, lower high, failed to make a lower low retracement, but then lower low, lower high, lower low. What do we see also? We see liquidity over here. We see sort of relative equal highs, which on a lower time frame probably will look something like this, where you have a resistance where people are probably going to be trying selling that, right? So I would actually wait for this POI over here if I want to continue sells once we break this structure point higher. However, my main bias, and this is why it's important to track your internal structure occurring over here, is that I want to see a mitigation occurring in this POI to then continue lower. If we do not get that, then we're probably going to be breaking above, and I'm going to be waiting for a retracement into discount pricing, into the breaker, into the origin, to then continue up. And this is really how you establish a bias and sort of the structure play for the day, right? You can potentially zoom into even lower time frames and we can have a look. We also, whoops, my bad. We also see that we took out liquidity on the way up, which is great. We also see that this POI is absolutely valid. And at this point, I don't have to do anything in this market. apart from waiting for my sell POI to hit or waiting for this structure point to break to then look for the retracements inside this region that can lead into extended buys. That's really everything that's really the only thing I'm focusing on at this point, right? There's no need to complicate it. And once again, I'm not getting into too much detail in regards to the liquidity pools, the liquidity points, the Asia highs and lows, because we're really trying to simplify stuff by establishing a bias for the day, right? Another great way to establish your bias for the day is to actually take a look at the daily cycle that is forming in that particular day, and that's probably going to give you some extra clues that you can follow to continue and establishing your bias. But for me, I would say to myself, I want to sell at this price, sell over here, right? And I would also say to myself, buy over here, buy here, if we do end up breaking the high, right? So there is a condition to be fulfilled. If we break the structure point higher, I can then safely say that we may be shifting, right? Because we do have something like this, and I would expect the retracement back down into the continued buys over here. So I don't know, this video may have not been too long, but I believe there's some value over here. So that's going to be it for today, right? You guys should understand that I cannot get into too much detail for the reasons that I've mentioned before, but nevertheless, I believe this video was extremely useful. And once again, before we wrap this up, you actually want to be paying attention to the liquidity pools, right? For example, I denoted very well over here that we had trend and liquidity, right? We have 1 touch, 2 touch, 3 touch, and inducement as well, right? Because as you can see, we actually give the 3rd tap, people start getting into sells, especially as it starts rejecting. They give them that little cookie to the retailers, and then we blow them through, right? Reason being is because we do have liquidity over here sitting on top of the trend line. So we know that if we can grab that liquidity into a point of interest, that's going to be amazing for us to look for confirmations over here to then take price lower, right? However, that is just a bias, and I'm not 100% sure it's going to do that, but I'm prepared in case price wants to actually come over here, mitigate, distribute, whatever you want to call it, and continue lower. So I'm just really sort of visualizing moves and getting ready for different scenarios. And this is the main takeaway here, guys. You want to visualize upcoming moves and really be prepared to the different variables, right? I know that we may not reach into this point of interest and drop, but the probability tells me that, hey, we do have some FU candles sitting over here, so we may want to target that. However, if we end up breaking above, that's absolutely cool and valid. I would look for the POIs on the way down that were left behind, probably unmitigated and untested, to then continue with the buys up, because I'm going to be following the internal trend and not really looking to fight the internal trend. So guys, I really hope you got some value out of this video. Remember that the mentorship video is going to be dropping on Monday, so stay tuned for that. And until next video, I wish you all good and profitable trading. I see you guys soon.